Hi, I'm Vince Molinari, founder and CEO of FinTech TV, and you're watching Taking Stock.
Time now for everyone's favorite part of the workday, the very end of the workday. 2 minutes ago, here into the closing bell on the trading floor of the New York Stock Exchange. Stocks not quite, Peter Tuchman, at session lows, but we've seen a lot of red on the big board. That has been the tail of the tape. It started that way. It continued that way. What's going on today?
So look, we actually ended up having a $2.7 billion sell program. Came in right on the bell. It had been for sale all day. Okay, this is a dead cat bounce off the bottom of a day where we've been selling all day. So this is basically short covering off of a massive sell day. Okay, I think this is really all about capex versus monetization. We know that it was all over Google's earnings, which were not bad at all, but we know that Google, Microsoft, a number of these big companies that are not necessarily AI companies have committed hundreds of billions of dollars to the capex data center play. And their shareholders are not happy with the fact that there's no immediate gratification. They're waiting for that to show up, negative cash flow for the first time in history, right? They are visionaries. The guys who run these companies are visionaries, and they, in 3 or 4 years, their shareholders will look back and go, if they hadn't have done it, they would have gone, why didn't you get involved? And so I think that's where we are. We're stuck in that corridor of capex versus monetization. I didn't come up with that one on my own. That's a Dan Ives special. But you know what? We surround ourselves with people who are smarter than us, so that we understand what's going on.
That's why I love when you're here to help me out. Peter Tuchman, thank you for being here. Time for the closing bell. More Taking Stock coming up after this. Sorry. All right, there you have it. On this Thursday, July 23rd, your final tail of the tape for this Thursday on Wall Street. The S&P 500 in the red, about 1.2%. The Dow 30 components down a clean percent. The New York Stock Exchange Composite Index down, let's call it 0.2%. And the small caps, the Russell 2000 down, let's call it 0.7%. We do have some winners in the market. May not feel like it, but we do have outperformance from industrials, utilities, and healthcare. Plenty of lagging parts of the S&P 500, though. Consumer discretionary, consumer staples, and telecom. Over to the Dow, the winners on the day, Honeywell, Johnson & Johnson, as well as Merck, and some tech software names lagging the Dow 30 components today. That includes Alphabet, just removed off that earnings call yesterday. Peter Tuchman and I were just breaking down a moment ago. Amazon and Salesforce, shares of CRM, now down 40% since the start of 2026. The Mag 7 stocks all getting hammered. If you got them in your portfolio, maybe a good day not to check your brokerage account. Tesla shares down 14% on the day, now trading back down to where it was all the way back on August 20th, 2025. Speaking of Tesla, shares of SpaceX reaching a new all-time low of 110.85 intraday. Those shares did rebound at least a fair bit in the afternoon session. Treasury yields up across the board. This is the big one, folks. The 30-year Treasury yield, one of the highest levels we have seen in years. That's a real-time measure of how much money investors are demanding in exchange for agreeing to hold on to long-term government debt. Tough sledding overall for the airlines. The Jets ETF down about 3%. Retail, XRT ETF down 3%, the home builders and the software names. Let's bring in our good friend of the show, the great Greg Farinello, Executive Director and Head of U.S. Rates at Amerivet Securities. My man.
JD.
I had a lot to get through.
How
there
are you,
it's
baby?
one of those
Let's
days.
go,
We got a
baby.
lot of red on the big board.
Yeah.
Well, actually, Brent just came in under 100, but all day we had $100 barrel oil barrel. We were talking about that throughout the day.
Yeah.
Is it a sign geopolitics? Not quite on the back burner just yet.
It's not. Clearly, front and center right now, I think with clients, is geopolitical. And it comes and goes, right? I mean, we had oil at $58 a barrel. We climbed a little bit higher, we climbed back down. The president is escalating stuff, what's going on in the Middle East. Ultimately, I think what will come out of the Middle East on the geopolitical side is we will get some form of NATO with these countries in the Middle East. It's going to take some time, but I think it's going to happen. And in the interim, the market's going to be bumpy. And if you look at yields right now, we're tracking
Oh yeah.
We're tracking oil.
Multi-year
right?
highs.
Multi-year highs.
Yep.
So that's what's going on. In my view, I think, higher oil prices come out of growth in the end. I think the consumer is in a good place. I think the U.S. economy is in a good place. Now the question is, what is the Fed going to do around this situation?
So let's talk about that, because we got Kevin Warsh's second FOMC meeting, two-day policy meeting, Wednesday of next week, Wednesday the 29th, 2 o'clock decision. The Fed has communicated perhaps they're okay to wait. What might change that calculus for the FOMC?
Well, the ECB said they're going to wait too, and I think it's wise. And I have advised this at every level I can advise it to. It pays to wait right now. The ECB made the right decision. They said we're going to give this a little bit more time, and I do think we need a little bit more time. So we'll hear from Kevin Warsh. The Fed is doing nothing here, but they will do something if they have to, ultimately over time. And then we have, in the U.S., we have the Jackson Hole confab in.
That's right. My final question for you is going to be, what are you looking for between now and the end of August for Jackson Hole?
Well, it's a little bit about the data right now in terms of where it goes. I mean, the economy is doing okay. I mean, if you look at traditional economic measures, if you look at the claims, if you look at ISM, the economy is doing great. It's holding up, but in the end, if inflation stays high, they will act at some point, but they're going to wait.
Greg Farinello, longtime friend of the show. Please come back and see us anytime. It's nice to have you to kick off the broadcast today.
Love you, man.
All right, man. Take care of yourself. Robbie will grab your mic. You and I will talk soon. Howard, we'll go this way. More than $39 million in total trade volume up on the Polymarket event contract for the question of LeBron James's next team. That's right, a Miami Heat reunion, 47% odds. That's, of course, where LeBron won back in 2012 and 2013. His hometown Cleveland Cavaliers, 26%. He won there back in 2016. Maybe he joins Steph Curry and the Golden State Warriors, 16% odds that occurs. Jay Woods' very own Philadelphia 76ers, 8% odds. A few other teams clocking in at 1%. That includes Minnesota and Dallas. There is no chance he's going to be a New York Knick. LeBron James, 41 years old, about to enter his 24th NBA season. The so-called decision part 2 could come at any day. All right, let's take a look at shares here at Lockheed Martin. It is up 10.5% on the day here. Howie, one of the S&P's best today, a gap up in shares after reporting a BN raise for the second quarter, seeing a significant ramp up in global munitions productions. Shares of Lockheed up more than 10% today, up 16% since the start of 2026. In part 2 of this edition of NYC Innovates, Cheddar's own Chris Castellino and the Einstein of Wall Street, Mr. Peter Tuchman himself, continue their exploration of the history of NYC's Silicon Alley. Take a look.
Etsy launched out of Brooklyn in 2005. In 2006, Google opened an office in Chelsea, at the time its largest out of Silicon Valley. A year later, at a New York tech meetup, a 21-year-old named David Karp demoed a new blogging platform called Tumblr. The company established its prominent headquarters at 770 Broadway. In 2009, a location-based app called Foursquare was the breakout hit of the South by Southwest Tech Festival, eventually setting up their primary corporate headquarters at 50 West 23rd Street. And City Hall leaned in too. In 2011, Mayor Michael Bloomberg announced a $2 billion deal to bring the Cornell Tech campus to Roosevelt Island, a dedicated engineering school built to give New York the technical pipeline it never had the first time around. 3 years later, the city launched Digital NYC, a public-private portal built to formally position the city as a tech hub. By the mid-2010s, the rebuild had expanded far beyond media into heavy-hitting sectors like fintech with Betterment and Dashlane, ad tech giants like AppNexus and MediaMath, and a health tech boom led by Oscar, ZocDoc, and Flatiron Health. In 2016 alone, New York tech companies raised nearly $9.5 billion, still trailing the Bay Area, but unmistakably cementing the city as the country's second capital of tech. By the back half of the decade, the tech giants validated the ecosystem. Google expanded through Chelsea and into Hudson Square, while Facebook built out a massive hub in Hudson Yards. The entire ecosystem had diversified past traditional software, maturing into biotech, urban tech, and climate tech, categories nobody was pitching during the first Silicon Alley boom. And through every wave of it, the capital behind these companies kept getting cheaper. A decade of historically low interest rates changed the very math of how fast a company could go from idea to giant.
The speed at which things are brought to fruition are so fast, and they're also a function of the fact that now a tech company can borrow money in size from the Federal Reserve and from banks, enough money to go into R&D, right? That was why we had interest rates at zero for a long time.
That cheap capital didn't just rebuild Silicon Alley, it laid the foundation for an entirely new category of company, driving Wall Street to a level of investor conviction the city has never seen before.
We developed a sector called the Mag 7. AI is a brand new thing. The level of robotics, from the medical industry to all different industries, we've got tons of millionaires, many billionaires, lots of ingenuity and intelligence. The level of things that are being built, new startups and companies, it blows my mind.
That shift from software to hardware has a distinct name in New York now, deep tech. And unlike the dot-com years, this wave didn't just happen. It was systematically built. Columbia and NYU have become the anchor research engines for it. To fuel them, New York State launched a public-private supercomputing consortium called Empire AI in 2024, giving local institutions the computing power required to run serious, world-class AI research. Down in the Brooklyn Navy Yard, a venture platform called New Lab has spent nearly a decade turning a decommissioned shipbuilding facility into a sprawling home base for robotics, climate tech, and material-based science. It's an entire tech ecosystem that a growing wave of New York founders are building inside of today.
Welcome back to this Thursday afternoon edition of Taking Stock live from the trading floor of the New York Stock Exchange. Friend of the show, Mo Hagbin, joins us now and joins us once again. He is the Managing Director and Head of Strategic Products at ProShares, one of the pioneers of the ETF industry. Welcome back to the show.
Thanks for having me, JD.
I know you're here today for a very special reason. You just did the bell. Let's talk IQMM, your new Genius Money Market ETF. What is it geared towards? What is it all about?
Sure, yeah, look, we launched IQMM earlier this year, really targeting a wide variety of clients. Specifically, we thought, what about the stablecoin issuers, right? There was this legislation, the Genius Act, which is kind of in the name of the fund, essentially allowing treasury assets to be invested in a money market structure in exchange-traded fund space rather than mutual fund space. And it's been wildly successful. It's actually one of the largest money market ETF in the world.
Wow. So you saw an appetite for this particular type of product. Talk to me a bit more about the evolution, the shift from traditional mutual funds to money market ETFs. And if you're a would-be investor out there, what are the key points about money market ETFs you would want them to better understand?
Yeah, sure. Look, it's still a new category. We're, again, one of the largest funds in the category. We've been live for a few months. But just like any other ETF, it's the tradability, it's the ease of access, it's the transparency, it's the low cost. That applies to many of the products you know and love today, and it's no different in the money market space.
Let me ask you about a few IQMM features, things like dual NAV or dual net asset value, same day settlement. Please make those things make sense for people watching at home in plain English. What do they mean? Why do they matter?
Sure. Again, when you think about stablecoin treasurers, they're issuing tokens that need to be backed one-to-one by risk-free assets, in this case treasuries, inside of 93 days. In order to get access to that market and issue and redeem tokens, they kind of need price certainty at any time during the day. So the dual NAV is essentially our way of allowing investors in the primary market to be able to redeem shares or create shares at noon and at the end of the day rather than just at the end of the day. And T0 settlement is actually kind of the instantaneous ability to settle cash rather than wait till the next day to get it.
What do you see as being the future of cash in this new look world where ETFs continue to grow in popularity?
Look, I actually think this is just the beginning. We're moving to a world where things don't happen during market hours, they happen all the time. So 24/5, 24/7, that's where we're headed. So things that can trade throughout the day, over the weekends, settle at any point during the day, and essentially have instantaneous liquidity and settlement. Very different than what we're used to today in products. Obviously, we're not there yet, but that's the future.
Yeah, but probably not the not too distant future, perhaps. Mo Hagman, welcome back to the show. Nice to see you again, my man.
Good to see you.
Taking care.
Thank
Best
you.
to you and the team at ProShares, Managing Director, Head of Strategic Products at ProShares. Don't go away. A whole lot more taking stock coming up on this Thursday afternoon. Right after this. Welcome back to the show. Just yesterday, FinTech TV's very own lead anchor, Remy Blair, sat down with Blockchain Foundation's Clev Messidor. They discussed the latest news surrounding the Clarity Act. Take a look.
Joining me this morning to weigh in is Clev Messidor, Executive Director of the Blockchain Foundation. Clev, good morning. Great to have you here. Thank you so much for joining me. So there are a lot of headlines that are coming through right now, but when it comes to Clarity, where is the progress right now? And is the glass half full or empty?
Well, the good news is both Democrats and Republicans in Congress want to get this bill done. There is consensus that clarity is needed. The challenge is compromise, compromise, compromise. I'm optimistic. I'm encouraged that the White House is open to a conversation around language, around ethics. They weren't before, so that's good news. Congratulations to Senators Moreno and Loomis for negotiating that. But Congress has authority over legislation. They will determine what the language on ethics is. And it doesn't sound like the language that Democrats want is the same language that the White House is pushing. So ultimately, Congress will make a decision, but I think we can still get this over the line. You know, the most important thing for right now is bipartisanship and compromise. How can the crypto industry start really figuring out who's who, who's where? The sad reality is it's not just Democrats that we have to bring to our side. The issues around illicit finance and developer protections are a big issue for Republicans. And even this issue around yield has not been solved, even though we have a compromise. So what is the road to 60 votes? It's a challenging vote. It's a challenging road because you need votes on both sides.
Yeah.
And we need to start counting those votes, and we need to see who's who and who's where.
Yeah, absolutely, Clev. You highlighted the key points of contention, and compromise, depending on who you ask, is a very challenging word. But as we head into month end, we are fast approaching that recess in August. So we do have a timeline as well as schedule to keep. And after that, all eyes will continue to be on the nation's capital, but we're counting down to the midterm elections. So when you look at the calendar, why is this so important?
Well, before the August recess is important. But this is not a popularity contest. This is a legislative process, and there are steps involved. The calendar has not run out in Congress yet. So can we actually make that? I think it's August 4th before the Senate goes out and get a Senate vote. I'm not sure. But this Congress doesn't end till the end of this year. And Senator Toon, Senator Tim Scott, the House has already voted. We can still get this done. I'm hesitant to put arbitrary, you know, clamps on us like, oh my God, we have to do it by August research. We have a lot of work to do. We have a lot of work to do with Republicans and Democrats. These issues around yield, around developer protections, illicit finance, ethics, they're big issues. This is a landmark legislation. We need this legislation. And the good news is, as Senator Mark Warner pointed out last week, we need to get this done, right? But we have to make sure we work through these issues. And as the industry has to start counting our votes, lining up our champions, we can't lose somebody because they say, "Oh, I'm good on ethics, but I'm not good on the issues around illicit finance."
Yeah.
We have a lot of work to do. I'm not concerned about this August deadline. I am concerned about getting it done this Congress before midterms preferably, but this Congress is what we need.
Well, Clev, always great having you on the show. Thank you so much for joining us here today, and thank you so much for sharing your insights.
Welcome back to the show. Scarlett Sieber sat down with Grady Chesterton, the VP of Awards at Money 2020, to discuss the upcoming 2026 Money Awards. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and we have a special guest today. We have the one, the only, Grania Chesterton, who is VP of Awards for the Money 2020 Awards, which are called the Money Awards. Grania, thank you for being with us today.
Hi, so good to have you on the show as well.
Absolutely. Joining us all the way from foggy London town. But we have some great big things to talk about today. So, Grania, for those that do not know about the awards, this is year 2 of the Money Awards. Can you talk to us a little bit about the big successes from last year, what the Money Awards are, and what we should be looking forward to?
Yes, definitely. So the Money Awards are a global awards program, and they exist to celebrate the companies redefining the future of money worldwide. We designed them with the mission to set the global benchmark for excellence and really recognize companies that are pushing the boundaries of innovation, challenging traditional models, and transforming that financial landscape. And I think entering into year 2, we've been thinking, why are they becoming so prestigious? And I think that's down to a few key factors. Firstly, they're really judged with commercial influence. Secondly, they have a really big global reach. So we're ensuring that they cover, all remits of the financial services, but across the globe, which is super exciting. And then last of all, I think we're thinking about, what is the impact? How are they benefiting the industry? So we've been monitoring the success of the winners from last year, and we're really pleased to see that, these companies are now attracting new talent, they're getting new business, they're getting approached by new investors, and that's really, really important to us.
That is so extremely exciting. I love hearing that level of updates and details. Well, July 28th is the date that the award entries close. Can you talk a little bit about what type of companies should be entering the awards? I mean, of course, you have those 5 key categories: banking, payments, partnerships, startups, and diamond.
I mean, honestly, if you're innovating in fintech, whether you're a 3-person startup or a global bank, I really think you should be thinking about entering these awards right now. We've just been doing all of our jury onboardings this last week, and the conversations that the jury are having behind the scenes are just so exciting and interesting. So, yes, we've got our startup category that is for both early stage companies under 3 years that have raised less than 5 million. We've got our growth stage category, which is for 7 years for companies that have raised less than 15. Really looking for companies that are disrupting traditional models with technology or solving problems in real time. We've got our banking and our payments award, which is also open to all companies. There's no size restriction. What we're really looking for, though, is 12 months of measurable impact. So the jury need to be able to see, what was your problem, what was the solution, and how have you delivered those results? So what is the impact that they can measure? We've got our partnership category, which is really important to Money 2020 as well. It's all about collaborations. So we want to see companies that have formed a strategic alliance and work together. And then, of course, our most prestigious award, which is our Diamond Award, which is open to any of the above, but it's really looking for that extraordinary innovation that is driving results across the business.
That is very fascinating. And we know, of course, the big reveal, the winners will be revealed on October 18th, the first day of Money 2020 Las Vegas, USA in Las Vegas. Now, I think the big question is, there are a lot of award programs out there. You talked about the rigor, you talked about the background and expertise of the jury, you talked about the categories, but what does winning an award mean? You mentioned at the end a little bit about, Money 2020 is all about collaboration, getting business done. How does the awards actually contribute to business validation and growth, really?
Yeah, I think this is something that was really important to us. When we were establishing these awards, we wanted to think, how are they going to benefit the industry in the long run? And we want our entrants to feel that it's not just setting the benchmark and having their moment in the spotlight in Vegas, but it's really celebrating their work throughout the year. So, whilst the award show takes place in Las Vegas at our beautiful Sunday Night Live stage, which is our biggest opening stage for the whole show, we actually then continue to work with the teams from the companies that have won and our teams and our media partners to ensure that we're spotlighting that work throughout the year, whether it's with press moments, speaking opportunities, podcast interviews. We'll always ensure that at our different shows throughout the year, we're also looking to celebrate the work.
Very exciting. Thank you so much. Grania Chesterton, VP of Awards at Money 2020. The awards close July 28th. Don't miss your moment. Super exciting. It'll all be revealed October 18th live from Las Vegas at SNL. With that, thank you so much, Grania. For those of you, you can find more details below in the link. In the meantime, back over to you.
Tomorrow morning here on Wall Street, get the latest quarterly results from American Express and Verizon. Shares down 8% and up 8% year to date, respectively, in those two names. Thanks for watching today's edition of Taking Stock. Have a great Thursday night. We'll see you again tomorrow.